following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. Well, the Super Bowl is finally over. I think the highlight of the Super Bowl was the reaction of Eli Manning when his brother won the Super Bowl. I was shocked. I mean, he showed absolutely no emotion at all. I think that family's got major trouble. I don't know what caused it, but that was really an amazing response. Anyway, the first thing we're going to start off with, those of you that don't believe in Fibonacci numbers, I posted in the Fibonacci spiral as it relates to Donald Trump's hairstyle. One of you smart guys sent that to me. I had to share it with everybody because I thought it was rather funny. So you have to laugh at it for sure. Anyway, we're starting out here. We've got the Chinese New Year coming in today. All of China is closed. All their financial markets are closed until Monday. It's a big celebration. I think about 600 million Chinese are traveling or something like that. It's about 40% of the population travel this week to go to homes and visit friends and stuff. So that'll, they're going to be in turmoil. So we'll see what happens when they open next Monday. The Hang Seng Index is closed for a couple of days. I believe it's closed at least Monday and Tuesday, and possibly more. But I believe it's the first 2 days that they're closed. The big news today is comes from our good friend Deutsche Bank out of Germany. It's down another 5%. It is now broken below $15 a share. As you remember, back when it was around 26 or 27, it was certainly looking like Lehman Brothers, and now it's beginning to really look like Lehman Brothers. And the price objective on this, if you just did the long-term ABCDs, is somewhere between 5 and Bupkis is 0. So you want to be able to to see what's going on. I don't follow football very much at all, but my good friend Byron Tucker, who went to school at Amherst, the University of Chicago, he knows about as much about football as I do nuclear reactors. But I spoke with him yesterday, and he is on several board of directors, and on one of the meetings that they had on Friday, one of the board of directors said, well, Denver's going to win the game. He said, all of this is fixed anyway. Anybody that looks at the game will know that it's fixed. And so Byron, he asked the question, well, why do you think it's fixed? He said, well, I don't know the reasons behind it, but I can tell you how the game is going to go. And that is, anytime there's going to be a real critical flag occurring, it is going to go to the Denver Broncos. And I don't know if there were many critical flags yesterday or not, but the guy said that the score would be very low and that Denver would win the game. And, I don't know anything about football, but that's exactly how it happened. And everybody thought that, Carolina being 16-1, who would have thought that they would not been able to, even score more than what they did, which was really amazing. But that's football. That doesn't mean anything. This is the real game. So we'll get into it right now. We are going to take a look at the Dow Jones here as it relates to the Bradley model, because as you know, we have this big aspects that are hitting today and tomorrow, and we have some really big pattern completions occurring on some of these things. So we need to watch these very, very closely. Now, the first, as you can see here, we have a potential for something really big happening around this time, so we want to be watching. But the next Bradley date comes around the spring equinox, around the 21st of March. So the fact that we only made a 382 rally in the market after dropping as much as we did is a pretty negative sign, I would think. So just protect yourselves if you have your 401ks in your other retirement accounts, because it's going to be pretty nasty here, I believe, here in March. That's what is it? Was it Shakespeare that said, "Beware the Ides of March"? So maybe that's true. Maybe that'll be true for the market. And I posted a chart for LinkedIn, and as you can see from this chart, LinkedIn has given almost 50% of its value back in just a matter of a few days. So these are situations where you got to be really, really careful with some of these markets, because they looked really good at one time and they don't look too good right now. I've had a request, in fact, I've had 2 requests to talk about probably one of the best stocks in the United States. It certainly is as good as Google, in my opinion. And we'll certainly take a look at this right now, and that is the Amazon, the brainchild of Jeff Bezos. This is what it looks like over the past 8 months. We made that low on August the 24th. We've gone to the 786 retracement. We're actually trading $20 lower. Right now we're trading at around 485. The ABCD pattern measures to 489, and if you'll see the steepness of that move from the CD leg, that tells us that you're usually going to expand a little bit. And since we're beyond the 1.618, we've already expanded. So the only way that I would be looking at this stock would be to, because we have this real critical low coming in, this is my opinion, of course, I think we're going to have a pretty critical low here with this new moon that we're having, along with the big aspect that we have with Saturn tomorrow. So that's what we're looking at. We want to thank our good friends in the Astro Cycles realm, Shane Smolian of the wolftrader.net, and of course Norm Winsky of Astro Trends, that helped alert us to the fact that we have this big aspect that is coming due here today and tomorrow, and we're certainly getting a big help to the downside, with the Dow down 200, Nasdaq's down over 70, and the S&P's down about 20, I believe. So it's going to be an interesting day, and certainly an interesting week. So we'll watch it, what goes on through the rest. But the Amazon measures, what's really amazing, folks, everybody wanted this stock when it was 260, and now it's 660, and now it's 485, and nobody wants to touch it. And that reminds me of the old saying that they used to have. Well, it wasn't a saying, it was a badge that they used to wear in the hog pit and the pork belly pit. It was a big metal badge, and it said, "Buy them when they're crying and sell them when they're yelling." And that means you have to buy when nobody else wants it, and you got to sell when everybody wants it. That's fear and greed. That's the name of the game. So keep an eye on Amazon. If I had to buy a stock this week, that would be the one I'd be buying. They are not going out of business, and the pattern is there. This is the first ABCD pattern that we've had in this in a very long time. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to have Bill Koval of WDK Analytics on at the half-hour break. He's got some really good information for us, and he really feels very confident about something. And boy, that's what I like to hear, is when people not only walk the talk but do the talk. So Bill will be our guest here at the break when we come to the half-hour break period. So we'll wait for him to come on. Now I put the chart of Google into the ratio here, into the picture, so you would be able to see what's happening with Google. You see it had that big new high, and then it just gave up the ghost. You know, that's the kind of thing that when you see it, you know, you got to be at least respect technical analysis, if nothing else, because something certainly has happened, you know, with Google as what's happened with Amazon. And, you know, these are, I don't know anybody that doesn't use Google, and I don't know anybody that doesn't use Amazon. You know, so these are not going, they're not going to go out of business. You know, there's not any reasoning for them to do that. So we want to just watch it for a potential bounce, because, folks, we're in a situation where we got some really bad things happening, as you can possibly see. We're breaking. We're very, very close to breaking the 1.618 expansions in the New York, not the New York Stock Exchange Index. That still looks pretty good, but gosh, Larry, let's try it one time. The emerging markets, and also the Chinese market, and also the Hang Seng market. All of those have had 1.618 expansions. They rallied for 2 weeks, very, very shallowly, and now are ready to take those out, and that means that there could be another leg coming down. And when you see a chart like you see with Google, which is I believe Amazon, I believe, is the most Google is the most valuable stock now, and that's a little scary. And you already saw what happened to Apple. So you've got to be sort of careful in here, folks. That's just my opinion. We have some real key support coming here in the S&P 500 futures today, down around that 1838 level. That's a big completion of a very large ABCD pattern over the last 6 or 7 days. It's also a 1.618 expansion of the last big swing that we had. So watch that 1838 level to 1830 in the S&P, because that's going to be a real critical. Anything below 1825, you're setting up a 1760 in the S&P, and that's really what you're really looking at here, folks. We're in such a scary market here. I just want to show you. I've done this before, but I made a different color to make it a little bit more interesting. Is I put up the New York Stock Exchange monthly chart going back over the last 15 years, and as you can see, the very large 1, 2, 3, 4, 5 expanding triangle that we've had. But the thing to watch is the boxes that are there. Look at those little squared out boxes to show you the similarities between these patterns. This is not a very good chart, folks. I mean, not if you're long anyway. But you had the time squared out between the highs at 1 and 3 and 3 and 5. There was a beautiful ABCD between 2008, the low being C at 2011, and then D came in on May the 19th of this year. So this is a scary pattern, because if we take out that 8,900 in the New York Stock Exchange Index, you'll be looking at 7,000 easily, and that's down another 20% from where we are right now. And it could be like it was in 2008, and that would take it down. It would drop in half. And with the news out there of what's going on in the world with negative interest rates, half doesn't sound half bad when you look at some of these things. So you'll see that very easily. Someone's asked a question about the gold market. Thank you very much for ruining my day. As you know, I was very bullish gold down around the 1055, 1070 level when we were making that pullback. We had a really nice run to 1130. And then the market backed off just a little bit, and then away she went. The way I would do it now, I mean, it's $50 higher than I thought it was going to go. So what I would be doing now is to watch the first pullback that we have here in gold and silver. Silver is still lagging behind, but it is still, going up nonetheless. I mean, it should be trading at about $18 an ounce based on what gold is, and yet silver is only at $15 an ounce. So there's something not quite right from what I'm seeing in these things. That's what we have. Oh, we've got our good friend from La Paz, Mexico, Priceline Charlie. Charlie, how are you today, my friend?
Good. How about yourself, Larry?
I'm above ground, staying away from open graves.
Me too.
What can I do for you, my friend?
I'm 68 years old, so I watch open graves.
You're just a kid. I got a cat your age.
I'm calling about, I've been through the 2000 and 2008, and the thing that reminds me the most is the fact that when we come into an election year, the market seems to give it up pretty quick. And I expected a little bit of a bounce. We got a very little bit of a bounce. And I'm starting to think that today is the day, because it looks to me like Priceline is going to break support, that we have no choice but jump in. So I'm wondering and short again. And I'm wondering, what's your opinion?
Well, I have a very hard time selling markets that are, sharply lower. And we do have a new moon, which is, you're supposed to buy on a new moon. That's one of the stronger signals that you have on cycles. So I would, if I had to do anything today, and I don't have to do anything, but I probably will, is I'll be looking to buy the S&P down around that 1835 level. Is what I would be looking at. That would put it down about 30-some points on the day. The Dow will be down probably close to 300 at that time. But if the cycle is correct, it should have a pretty good bounce. The safest trade, Charlie, is to wait till tomorrow. And the reason why I say that is when you have these really long-ranging bars like we have now, they don't pay you extra money to try to catch a falling safe. let the safe hit the ground, let the money fall out of it, and pick it up tomorrow. So tomorrow you might have to pay a higher price for it, but at least you know that the bottom is in. Here you're trying to catch a falling knife, and I don't think that's the right thing to do. So wait and see what happens tomorrow. That's that's it. You've got a German market that is coming unglued right now. It's down almost 3% in Germany, with Deutsche Bank down 5%. China and all of Asia is closed due to the Chinese New Year. This is not the time to take out your wallet and let the termites get into it. Wait till tomorrow, my friend.
Okay, I appreciate your opinion. I know you got a guest at 9:30. So
he'll wait. He'll wait. Not a problem. He's a very patient fellow. We always like to hear from you anyway. So if you got something else, fire away.
Yes.
Come back after the break. Stay with us, Charlie. Come back after the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got Bill Koval of WDK Analytics on the line. And Bill, I looked at your stuff, and it certainly looks real interesting. I've got your first chart posted, so why don't you fire away, and then we'll proceed with the rest of them.
Yeah, Larry, this first one is, I got some echo here. Are you hearing it?
Well, I don't hear an echo, but my hearing is about it's not that good, so I wouldn't worry too much about it. Yeah.
Okay, well, we'll push through here. Basically, the overarching view is from the 2009 low. The S&P cash has really not broken that down line yet, even though the small cap and the equal weight have. To me, that provides some basis for being bullish here, looking for a kind of a decent bounce. Slide number 2 is showing some market internals. This is the percent of issues that are above the 200-day or the 100-day moving average, and this goes back to, let's see, I think we go back to 2011 here, and what it's showing is we've got three big drops, including the one from the past week or so, where, frankly, about roughly 90% of the issues are below the 100-day moving average. So a pretty big, pretty good hole there. It's drilled.
This is
third slide shows the current range going back to October of 2015. The low range has been highlighted, and it corresponds quite nicely with areas that we've recently touched again. And each time out of those 3 times that it's been down in that range, there's been like a 150 point ES bounce. Even in the first one, it was more like 200 points or so. So again, some more evidence there that we're looking at a spot that has some potential for higher prices.
Bill, these are
number 4 is a chart of skew overlaid on INX. It's a little bit busy, but it's basically showing the same thing, that we're looking at some pretty severe drops and what I would call support lines there, both the cash index and the skew. Skew is down basically at levels that it has not seen since, the deepest penetration has been down at 112 there in the fall of 2014. So, any questions on that so far? I kind of went quickly over it.
I'm ready to go to the next one, but before we get that, we had a question from one of our listeners. Is that basically you're describing an incredibly oversold situation that we haven't seen in about 4 years? Is that the way that we read it?
Yeah, that's exactly right. Oversold, reason for a bounce. Now, you've been with me since fall of 14 when I started my service, and I've been, unambiguously bearish since then, and I'm still bearish. But I can't. I'm not one of those that's perma bear. I mean, I focus a little bit more on the short term. If you look out for too long a term, I mean, how are you going to make any day-to-day decisions? You got to make money kind of on a day-to-day, week-to-week basis, and that's why I like to look at the short term as well. That's where you're executing your orders. So all I'm looking at here is, I think, a reasonable chance for a bounce. I think this bounce is not going to carry more than to maybe 1950, maybe 1975. I don't think it's going to get any higher than that, and then I look for another rollover again.
Well, the market sure looks bearish when you look at some of the high flyer stocks like Google and Amazon and Apple. Really, and in Twitter, look at Twitter, it's down 75% from its high. So there's been some, big distribution in some of those stocks anyway. Now, Bill, the next one we've got is your put to call ratio. Do you want to describe to us what this chart is telling you?
Yeah, this is the equity put call ratio. I don't follow this regularly. I follow the OEX S&P 100 put call ratio. It's much more accurate on a week-to-week basis. But the equity is only good at market extremes, quite frankly. And we're at one of those levels where it is quite, I guess I'll say, overbought, where it's currently at a level of, 155 there or so. And also, I don't show it, but the OEX put-call ratio is 137 now. Just took a huge bump this week up, again, to extreme levels. And, these are some more reasons to look for a bounce here. And in the last slide, we're looking at a little bit shorter frames. This is the daily and the weekly, and I've got a linear regression channel. And that's the most important thing. And we've got a few touches of the lower band there that have some value as potential support. So, just to sum up, we're down in the range that I highlighted in my newsletter yesterday, wherein I have, and in just the chart here, where we're looking at 1820 to 1845. Futures just pegged 1845 here for the second time. So we're in that area. I'm not saying people jump in and buy here. What I always like to do in situations like this to avoid a falling knife is to use buy stop levels, and that would be my advice. Now, if you've got some more questions, etc., I want to bring up a chart. I've got a new alert system, and I want to give you the levels on the daily, if not the weekly, to show you where that buy stop level would be. I'm going to have it in the next.
We've got to take a break here to pay a few bills, so stay with us, and we'll have you on after we have this commercial, okay?
Yeah, sure.
It's not a Super Bowl commercial, but it's just as entertaining. So stay with us. Stay with us, my friend. This is Bill Koval of WDK Analytics, Scottsdale, Arizona, and he's showing us why we're looking at some major support coming in here with some technicals that are saying the market is at an extreme level of being oversold, which we can I think can agree with that. So we'll see that when he gets back from the break here, we'll be able to chat with him some more.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
What did I do wrong here? Okay, we've got Bill Koval on the line. Bill, are you still there?
Sure am, Larry.
I hope you are. Bill, are you still there?
Yeah, can you hear me?
I hear you perfectly. It was my fault. What I've done now is I've posted into Tiger TV these 6 reasons that we've just talked about, and maybe we could go through these one at a time. And the reason why I think we should go through them one at a time is I looked at the technical work that you did, and I really think it's outstanding, Bill. You might be wrong, but boy, you've certainly put the you put the technical picture in perspective as far as being, very, very oversold. So why don't we start out here with number 1, and you can add things as you go.
Okay, so I'm just looking at the charts myself, but it's not only the S&P cash that has bounced off the the uptrend line, but the Dow Jones whole market has as well. Furthermore, I have been following for some months now the money flow published by Dow Jones based on Dow Jones whole market sectors. And it's been pretty accurate in terms of, determining when it's on a daily or weekly overbought, oversold. In fact, I carry them every week in my newsletter. So, the money flow is another positive that I haven't put in here. And there's actually a number of others that I have in the newsletter itself. In the newsletter, by the way, there's like 40 slides here this past week, the biggest issue I've ever made, out of the 180 so far. And if your listeners want to, they can go to WDKanalytics.com to the newsletter tab and put their email address in, and we'll actually send them that huge Sunday issue and some bonus slides. I've got a new short long lines chart set up that it's really good for like intraday trading, and I'll show them what that looks like. But let's go on here to number 2 then. The number of issues above the 100-day moving average, I follow those, but I also follow the percentage below the 20, or above the 20 and above the 50-day moving average as well. Interesting thing happened this past week in that the ratio I calculated between the 20 and the 100 showed positive divergence from from prior days and weeks. That's another sign that of a potential bottom here. Next on the slide number 3, this is the bottom area again, 1820 to 1865. The futures are bouncing off of 1840 roughly now, and that's right dead in the middle of that. And quite frankly, my long lines are showing that we're going to bounce from here today. I mean, it's not like this is going down for there's no new bull market, no new bear market break just yet. So I'm pretty confident we're going to get a decent bounce. Maybe it's not going to be the 100 points plus that I'm looking for, but it's going to be pretty meaningful. As you know, the longer you go back and the more penetrations, the more touches of these support areas, the stronger the move tends to be. The skew, we're on number 4, again, diving into the skew just a little bit. That is almost my favorite volatility indicator. I mean, I'm so familiar with it, I can tell, day to day, week to week, really what's going on in the market. And as a matter of fact, the skew being down in these areas, I look back a couple of years or more over records that I've got on my skew charts and saw that when it touched these areas that it has been, you got huge moves off of that. So, I feel pretty confident. Again, I'm not saying go buy here at the moment, but choose a buy stop, an appropriate buy stop. I put a buy stop in for the futures in a newsletter where we're down, quite a bit below that. So I'll have to recast that in both the cash and the futures terms. But one easy way to set a buy stop might be at the upper range of the of that band, and that would be 1860 to 1880 would be probably an appropriate buy stop area, for those who are frightened of buying in here. No problem. I don't want to buy a falling knife either. So, it's up to 1860 to 1880. Get a buy stop and a short sell stop, and you may come out all right, and you probably won't lose much if there's a problem.
Well, at least you're protecting yourself. That's the key element here.
Oh, sure. Another technique I've developed here, and I mean it's not anything revolutionary, but in trading ETFs, I've got new rules and a new program. And basically, what I do is I trade the leverage ETFs. I scale into positions, usually with at least three entries and 3 exits. And the first one, I'll give the first one a little bit of leeway, and then I'll enter. But I won't even enter the first one, or the second one rather, until I get a profit on the first one. Mm-hmm. And then I enter the second one, and and then I keep scaling upwards, if you will. That way, if it rolls over, you're not going to lose any money. You may even get stopped out at a profit. So it's a very conservative way of doing it, and that is one way to handle this situation that we're talking about now, is to just scale into a position with small one in the beginning. Don't add on to it until you get a profit.
Yeah, Bill, we have a question from one of our listeners, but we've got to take a break here. But I'd like for you to answer when we come back from the break, and that is, he would like for you to give us an explanation in layman's terms what you mean by the skewing. I know it has to do with statistics, but if you could break it down so that in layman's terms what that skew means, And
Sure,
we'll do
yeah.
that after we come back from the break, and then we also want to let the folks know how they can reach you again to get all this information that you have on the slide. So if you'll be so kind as to stay with us until after the break, and then we'll finish up with the skew and then also with how we can reach you. How does that sound?
Yeah, that's great, Larry. Hold on.
All right, you stay with us, and we'll be back right after the break here. We got the market under a lot of pressure. We're getting close to the 1835 level, which is the expansion number in the S&P futures. We'll be right back, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Bill Koval of WDK Analytics, and you're going to explain to us what your skew means?
Yeah, Larry. Skew. It's a bit technical, and I'm going to give my explanation for it, but I would encourage. In fact, I may have a detailed explanation of it. And in fact, if folks want to sign up for a free newsletter subscription, I'll dig that skew definition up, and I'll send that to everybody too. That's fair enough. Basically, what I like to call it is it's a measure of what the pros are doing, the big money doing in options. They use OEX options probably, and but as far as the pros, they're using skew and they're using VIX futures to hedge their bets. And skew is a measure of the term structure of the option premiums, if you will, and it measures like the 1 month, 3 months, 6 months, a year out, and compares the the premium levels. And so the clue to me for this potential move here simply was a big drop in the skew to levels that we've not seen. Well, we've seen them here a few times in the past year, but in my charts, I just compare what those levels were and what the S&P did after that, and I mean it's just a dead-on correlation. Just skew bumps up, and the indexes bump up too. So it's what got me on this thread of saying, well, let's look back and see what's going on with some other things. So. I've got a wealth of internals. There's other things that are supporting this, and some contrary information. Nothing is always unanimous. But,
listen, thank you for joining us, Bill. The show's winding up now. We'll have you on very soon, okay?
Okay, Larry. Again, WDKanalytics.com, and go to the newsletter tab.
Thank you so much.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.